Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein with your financial market update for this weekend edition, and we are now on Friday the 25th of August, 2017, just after 3:20 p.m. Central Daylight Time. So we're looking, and remember, at 3:20 they're going to reopen a lot of the financial markets again, and they'll trade to 4 o'clock, but these will be the settlement prices in the stock indices, a minor up there. Metal markets had a gain today. The dollar got hit as the euro soared back over the 119 level. Now, I personally have not seen anything yet that Mr. Draghi, the head of the ECB, has said. I want to be able to see that, and I'll write about it over the weekend. But Ms. Yellen said nothing, and that put the dollar under pressure, gave the bid today to the metal markets right away. As you can see, the bonds and notes, small gains. We've got the hurricane situation coming on board in Texas, a monster. They did kick all the way up to 159, the gasoline, fell from there 7 cents. So if you think trading on days of hurricanes hitting land and you can figure it out, God bless you. But I've learned in my career, walk away. It's too difficult, even if you hit it right. What are you going to do? People's lives are ruined and you made a few bucks on it? I don't know. Doesn't seem right to me. So let's go to the charts and get a feel for what's going on. On the monthly chart, the long-term picture, the market is still bucking up against, if you will, an upper trend line. And for the month, we are down, though, 32 points at this point. When we come to the weekly area chart of closes, for the week, we've added 130 points inside of this market. That's not bad. I am bothered by the chart action on the weekly chart. And the reason I'm bothered, if these channels that I drew, and they do touch properly, 3 points here, and the top one's touching the right amount of points, we've broken through that. The question is, do we have a down channel developing as the market comes there? When I go to my swing line study, I still have bullishness in the market. I've got a pattern of higher lows, and I have higher highs, bullish. I go to the 18-week moving average of closes, the long-term average, and it has been very valid. Notice the points when it's hit, it's held nicely. If I step back here, you got under it. When you came back over it, you really haven't been able to close back under it since November. So the market is still very much in its bullish mode. The market ran into resistance the past 2 weeks at the upper Bollinger Band, and it's slowly backing away from it. And momentum is bothersome to me. Momentum is turning down. So instead of it staying up, it is now rolled to the downside. We saw that on that chart with the channel, how the market is breaking through it. So while these charts have not yet turned bearish, they've lost their upside momentum. Problems developing. In the NASDAQ, momentum to the downside. This market's got a pattern of lower highs, lower lows. It has gone to the 18-week moving average of closes to try to find support. The 100-week is way down here. It's not that I didn't put it on the chart. And if the market continues this path, are we going to get a further break into the 55-60 level? That's 250 points. It's far away. I'm not saying it has to happen, but I am saying momentum is turned down. The trend is turned down. The only thing staying up temporarily is the bias because the market is over the 18-week moving average of closes. On the E-mini, you have a pattern here of higher high, lower low. If you take a look at the close, you're still over the 18-week moving average of closes, but momentum is turned down here. We are in what we call Chop City. And probably the reason for that is, first, the market wanted to get through this Jackson Hole meeting. But like this, the market's going to turn its attention to right after the Labor Day holiday, Congress coming back. Can they get anything done? Or do we take premiums out of these markets because tax reform doesn't get done, and away you go, back to the downside? Or Is President Trump able to whip everybody into line, get that passed, and this is no more than a correction, and then we get that, if you will, the turbocharge of tax reform, maybe infrastructure spending. You're at that zone where the market is looking at it. Keep in the back of your mind also that later next month we get the election out of Germany, and yes, markets will pay attention to that. Does Ms. Merkel get in or not again? All these things will come home to roost. Adding to this, you've seen momentum lost in the other indices. Well, it's still staying lost in the Russell. It's gone from the upper Bollinger Band to the bottom. Now remember, a Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. And if you take a look, it's done a pretty darn good job of it. So we're at a support zone on this market. If the market's going to fall apart, it does it from this area and has to push things a lot lower. Not saying it can't happen. I'm saying you've gone from your resistance to your support, and to me that's fairly important. In the process, momentum is down, bias is down. There's nothing friendly on most of these stock charts is what's bothering me right here. In the VIX, this is the flip side. The VIX is saying, Ira, you're wrong. Take a look. You've got a downtrend, lower lows, lower highs. You're under the 18-week average. You've gone to the 100-week, and momentum's pointing down. If this is going down, but the difference here is this is a daily chart, but if it's going down, then what should we be seeing? We should be seeing stocks go up, and on a daily basis, we know that we did see that. It's the longer-term chart I'm nervous about. When we get to the 10-year notes, the 10-year notes, everything on a weekly chart, we're up 4 ticks for the week. The trend is still up, higher lows, higher highs, trend up, support back at 126.05, 2 layers of resistance, 127.13 and 128. And right now, we don't have a lot to talk about until we get to the September FOMC meeting, which the probability of the Fed raising rates is close to 0. But the probability of them doing something or saying something about rolling the balance sheet and letting maturities, parts of our assets, the bonds, the notes that they've been buying, roll off, as it's called, by maturing, well, maybe they're going to mention something there. The market's not bothered by that because it seems to be, it's going to be such a gradual process that it's not like it all happens at once. So just pointing all those out. Dollar index, I don't see anything bullish on this chart. The weekly chart is terrible. Lower highs, lower lows, momentum staying bearish. The market's back into the pattern that it got a bounce last week. We didn't know how high was. Well, now we know. And the market, it's coming down for the lows here. And the next new low could be 91.50. This market's still very bearish. And guess what happened today in the euro? The flip-flop. It roars to the upside, up 160 points. Now, that is a pretty strong gain for the week. And this market's running there as the market is anticipating that the European Central Bank is about to stop buying their QE program, and that will cause this currency to get a bit stronger. The U.S. is caught where we want to raise rates, but frankly, without inflation, you'd be just doing it to put bullets into the chamber in case you turn down in the economy. In the Aussie dollar, momentum has flattened out, but to the upside. You've got higher lows, higher highs, upside bias here. Canadian dollar, bullish. Higher lows, higher highs, momentum locked into a bull mode right there, targeting nearly the 8,200 area if the trend is going to continue. Japanese yen, it's run again into that big resistance area. I want you to look at the sideways action that you see here. Notice how each time you've come up to this upper Bollinger Band, you have fallen back. You've been caught since back in April in basically just sideways on the longer term basis, a non-trend basis in this market. Now in the crude oil, we know that the market's having to deal with a historic storm. They're calling it a catastrophic storm, in fact, because it could dump anywhere between 20 to 50 inches of rain in parts of Texas. Now, they're also talking the storm's not only going to come on board tonight, it's going to last into early next week. The movement's very slow. It could even go back into the Gulf before it's all done and reemerge as something. The problem that we're all having is that's a heck of a lot of rain. What does it do to the refineries? Well, so far, it still kept crude in an uptrend. Got the higher highs, higher lows. Should the market take out 46.46 on this chart, what would suddenly happen is you'd have lower highs, lower lows under the 18-week average. You'd be in line to challenge the 100-week average at 45.37. And for that to occur, momentum would most certainly try to turn itself down. In the nat gas, you remain in a bearish trend. And, you know, nat gas didn't respond the way that it used to in the old days when we get shut-ins from hurricanes, and that's because we get so much nat gas from shale areas now. It used to be the offshore rigs, and when you'd shut them in, you'd lose all the nat gas that they're getting. That technology is all shifted, and it's one of the reasons you're not getting these big bids in it due to that. And you're in a bear trend. You got lower highs, lower lows. Momentum is flat, though, and the bias is down. So that's how I'm looking at those charts. Now, one of the things you're going to want to get from all this is what we call our counts, our price counts. So let me explain. As we come to the end of the summer, you end summertime trading where, especially in these 2 weeks, it's fairly lethargic and so on. Then as we get into September, Congress comes back, the kids are back at school, everybody's mind's on the markets, things get very serious very fast. You set up formations like a flat one here that starts getting breakouts to the upside, or ones that have soared to the upside and all of a sudden they start breaking down. Where might those markets go when that type of formation comes in? It's what price counts offer you. Now, we've offered this for nearly 2 years for free, and I hope you've enjoyed it. You're going to discover very shortly it's now going to become a subscription service starting next week. And the reason is we have so many people that want the service, it's time for us to stop doing it for totally free. Can you get it elsewhere? No. We wrote the formulas, we do them, we don't share the formulas. I'm not saying somebody can't do something similar, I doubt they'd have it. I know how complex the formulas are. But if you haven't tried it and you want to, yeah, we're still offering free trials. Call, go to our website. Yay, it appears that we've got, our YouTube has fixed the cards. If you click up here on the icon, the forms will appear, or underneath us on many different websites it says, click here for Ira's free information. Have yourselves a great weekend. Enjoy the end of the summer, as I call it, and I'll see you next week.